Hello everybody and welcome back to another video. Today we're going to be discussing 5-minute market maker models and macro power of 3 and how they relate to each other. So getting right into it, we're looking at a 5-minute chart on NASDAQ. Today is June 3rd, 2025 and it is a Tuesday. So let's break down some price delivery that we see here. Of course, we see that the market goes down first and then goes up. So at the time of recording, which is not depicted here, but in recent lessons, the market relative to higher time frame direction, institutional order flow has been bullish, extremely bullish, as a matter of fact. So if we're seeing retracements and then reasons for price to get back up here, so session highs, equal highs, etc., things that will continue to break down here, and tools and signatures that we always look for, we should always anticipate and look for a reason for reversal signatures in general. It doesn't mean we want to rush into it, of course. We have to build a narrative and understand probabilities, but the point is that if we've been bullish on the higher time frame and we leave a bunch of buy-side liquidity behind on a retracement, it's likely that it'll be revisited at some point. It's just a matter of identifying when, again, utilizing the tools that we use on a day-to-day basis. So let's begin breaking down of some of the things that we see here. We're seeing sell-side delivery, and not only, again, just understanding we've been bullish and where we could be going. And as you see here, the low is made virtually right at, obviously a little coloring outside the lines below, but virtually right at previous day's refined equilibrium level. And this can be something for you to search for. Okay, so I did not include this level for you. Utilizing our understanding and concepts that we have in our trading toolkit, go to the higher time frames. I'll say the 15-minute time frame, and try to find this refined equilibrium level. This can be your homework. Okay, and again, it's NQM2025, June 3rd, 2025 on a Tuesday. So not only are we reaching that equilibrium level, which if we've been bullish, this is a place that we can, commonly reverse with sound logic, but also we have reason to expect higher prices. We have London high, which is a common session high to gravitate towards. We have equal highs right here, internal engineered buy side liquidity. Also, just additionally, as a side note, note how these equal highs are right at, if we eyeball this from this low to this high, right around equilibrium of this dealing range. That's a strong draw as well. And then above that, we have Asia high right here. Above that, we have the new day opening gap. It's a small new day opening gap, but that's a strong magnet for price. And important to point out and to weigh these probabilities if we are seeing a bunch of buy-side magnets after, the sell side of the curve is complete. And then above that, of course, we have previous day high and beyond, which ultimately I think we're going to get up to all-time highs, right? And just as I've reiterated a couple times here, we've been so bullish on the higher time frame. So what do we see here, right? When we were going lower, do we see bearish PD arrays acting as resistance? In other words, if price retraces into a bearish PD array, does it reject and go lower? So let's look at this here. Previous day high, 5-minute SIBI, wick into it there, we go lower. 5-minute SIBI, work it there, one more sweep and wick into it there again, and form Asia high. Okay, and again, note the bodies tell the story. So we revisit this 5-minute SIBI, but the bodies respect it, and then we continue to go lower. Same thing here, this 5-minute SIBI, we work it once, a couple times at the bottom here, again, try here, and push lower. Okay, look at any of the, this SIBI right here, we're pushing lower. We do have a bit of a retracement here, and then aggressive sell side delivery here, and once more, lastly, that makes the low for London low here. Okay, so in other words, we're seeing bearish delivery utilizing the tools and conceptual understanding that we use in our trading. Bearish PD arrays, bearish fair value gaps, bearish order blocks pushing down price, etc. Okay. Now, if we understand that it's likely that a reversal, could occur for all the reasons we've mentioned. We're just waiting, looking at the 5-minute chart here, we're just waiting for those reversal signatures. So right here, we see a sweep, right? We deliver to previous day's refined equilibrium right here. And now looking at this 5-minute chart, it's like, okay, well, we delivered to it here and swept Asia low. And we have this SIBI. Didn't we close above that one? Well, we have both of these consecutive SIBIs. So we need to wait for stronger confirmation, a close above both of those prior. Okay. And these moments, even if this was a 1-minute chart, it's more, it's higher probability, it's a stronger confirmation to wait for a close above both consecutive SIBIs to become an inversion, right? So this, specific example does not occur to you when you have an easily avoidable loss. So again, we work that level, yes, but then we come down once more, and now we start to see, well, we just have one single SIBI here. We displace above that. These two consecutive SIBIs we mentioned, where and how were they utilized to deliver price first? They send price lower to sweep sell side liquidity right here, this swing low. Okay, so its initial state of delivery was bearish. We deliver higher, a little back and forth here. Ultimately, we close above the SIBI, and we know that if we have a SIBI that was first used to send us lower, and then we close above, what does that become for us as RTO traders? High probability bullish inversion. Okay, look at where we're stopping in this high probability bullish inversion. Right around 50%, the bodies are respecting that. Consequent encroachment. Okay, that's a bullish signature. Then we continue higher, and if we're seeing this turning point right here with this close, where's the likely first draw? Well, we have minute open here, but we want to see us expand through that, right? We have London high right here. Okay, so we want to be looking for opportunities. If we first identify a turning point on the 5-minute chart and see a high probability inversion, which is my favorite to utilize, we want to look to see if there's macro power of 3 setups in here. There's not always going to be, but this is the logic behind it, because we can key off of these 5-minute high probability PD arrays, understanding this is a sell side, the sell side of the curve, I should say, followed by a potential turning point back to buy side, especially when higher time frame direction has been bullish, right? And again, it's like, well, if we have this high probability inversion, that should be a smokescreen for a BISI below, right? And we do have one little one here, but what's the argument more so why we shouldn't go to London low? Well, we already delivered to previous days refined EQ. We had a sweep, and we closed above the high probability inversion. Now, on top of this, when we sweep London high, looking at this chart, is there any sign of reversal? No, there's not, right? We just pump higher. And again, it's in line with the higher time frame trend. So this is why you don't try to call tops. We don't just sweep a London high and then reverse automatically to the other side of the range. You have to understand probabilities, right? We expand through. Now, what's the next roadblock for us to get to? Get above, I should say. The SIBI we mentioned here, that sent us lower. Additionally, if we're going to expand through London high, don't we have these equal highs right here? Yes. Price delivers very nicely right up there. And we get to close above the SIBI. So this SIBI is now, we're in a buy program here in the 5-minute chart. We close above, come down into it, and expand higher. Now, price then, again, do we still have a reason for price to go higher? Well, we have gone, substantially higher. We have come into a premium of this range from the sell side leg. We did purge London high, these equal highs here, but we spent some time here, and then look what they do. They bring it right here. Now, what do you notice about this high? I'll give it, 5 seconds. You can pause the video. Okay. Where is this high falling just short of? Asia high right here, a session high. So if a session high is a strong draw on liquidity in and of itself, and then we also have this high before retracement when we're on the buy side of the curve, fall literally just short of it, that's an even stronger, not only draw on liquidity, but just a depiction of what your bias should be heading into a macro window if we see that opportunity, in this case, a long opportunity. Okay. Now, above that, also, we have the new day opening gap. and previous day high, which is also, an additional draw just for confluence, right? I don't know why I said honestly, but I'll leave that in there because I'm a real one. But if we have not only an understanding that bearish PD rays that's first sent us lower from the sell side of the curve here are failing to push price lower, and price is having really no trouble displacing and closing above them, we know that price is in a buy program. And additionally, we see this clear bias footprint just short of Asia high. We're just waiting to see if we get a macro power of 3 model, understanding the macro power of 3 checklist, that can give us an opportunity to deliver to these highs, right? So see how we're framing logic. Now, before I progress to the 1 minute time frame and we talk about a setup, the trade I took today, a couple things. If this is a high probability bullish inversion, see this BISI right here? What do you know about smoke screens? Don't we want that to be a breakaway gap? Yes, we do. So if the market retraces during a macro for macro downside manipulation, right? Where can it go? See these relative equal lows here, this low, and this low? We want to see those ran, and note what's right below that. The 5-minute high probability inversion. Now, again, going back to what I just said, we want to see this remain open. So if price does in fact come down here and give us an opportunity, wouldn't this be a completely logical place to expect a turning point from, and ultimately the inception of a macro power of 3 setup? Wouldn't that make sense? In best case, what? We leave this high short of Asia high, right? So see how we're utilizing the tools, blending them together to weigh probabilities and understand where a logical turning point could occur if we see a retracement. If we go here, what do we see? Asia high, as we mentioned, this is that high that's falling just short of it. That's a bias footprint. We love those. And we see this retracement. And where are we going? I've changed the shade of color because there was a lot of, overlapping with this way, to this blue here. But this is that 5-minute high probability inversion we just mentioned. And to go back again, that's this one right here. Okay. I believe this was around 7:50 p.m. The exact anchoring. I could be a little off in that, but you see it here. You guys should go into your charts and look at this yourself and mark up your own charts and save it for your own journal entry, your own study. Okay, but that is now this blue box here. Now, what do we see occurs? Price comes down into the 5-minute inversion. Okay, and then boom, right at macro open, we go down once more, revisit it. But what do we see? A lower time frame macro SMT. Boom. All that's left to do is wait for this close above this SIBI. Cherry on top, we get a BISI passing through it. It's a high probability macro BPR and just beautiful expansion to Asia high. Okay. Now, again, it's the inspiring part with all of this. It's nothing new with macro power of 3, but building this logic, building a narrative and understanding of where we're delivering from, we can get a very high probability setup, right? A very clear depiction on what our bias should be with bias footprints, engineered buy side liquidity. Okay. We understand the macro power 3 entry criteria, the checklist. Okay. Where if we see clear, this is literally at its core what we want to look for. If you only take these types of trades, you're in a great spot. You're going to trade a lot less. If you can be patient, then you're fine. Most traders can't be patient. Right? But see how we built clear logic and understood just the framework of we're in a buy program on the higher time frame and utilizing these 5-minute high probability PD rays, this inversion here. And then also, when this macro starts, I don't know if we're going to be given this SMT. I don't know that. But I'm ready to, execute on my model if and when this happens quick, where boom, we come below. I'm seeing ES take this out and not NASDAQ. Close above this BPR here. Boom. This SIBI, I should say. Boom. High probability inversion. I'm long. That's the model. That's narrative. Okay. Additionally, for a signature of strength relative to these high probability PD arrays, what do you notice relative to this 5-minute high probability inversion? Are we reaching CE or 50% of it? No, we're not. That's a signature of strength. So when we close above here, we're saying, okay, what additional signatures of strength are there? SMT, and we didn't even reach for this 5-minute inversion. That's strong. That's a bullish signature. These are things that we repeat over and over again. Okay, now going back to what I was saying before I kind of got sidetracked there, this should inspire us, because in order to have an understanding of, and I have to be, careful with my wording here if you are understanding what I'm saying. I'm not a licensed financial advisor, so I have to be careful with my wording. I'm sure you guys understand. But if you want to be consistent in your understanding of what you're looking for, what constitutes a high probability setup, and you can repeatedly do this, you're in a very good position, right? And again, the super inspiring part, and something that should relieve a lot of the pressure, if I go back to the previous slide, should be that you don't need to catch this whole move up to, again, my language needs to be careful, to be consistent and to get your piece, right? And I have to say this in your demo, in your studying, right? But again, ideally, do I snipe this low and hold it all the way? Yeah, but it's more pressure. Sometimes it'll happen, and those are the great days, great trades. But if price is in here and it's just expanding away without a model for me, there's no need for me to chase it, because I know this type of setup, even if we've gone higher, if I see this footprint where this high fell just short of a session high, in this case Asia high, I know that I can just simply wait, and one of these models, or excuse me, one of these setups with my model are likely to occur. And if it doesn't, I just continue to wait, and that's trading, right? But you don't need to catch the whole move. You wait for sound logic. You wait for a clear drawn liquidity. You can literally wait until you get your footing. Again, you're going to trade less, but you can just wait for a high like this to fall short of a session high when we're bullish, and vice versa when we're bearish. A low fall short of a London low, another session low, previous day low, and then just see if you get your macro power of 3 setup targeting that. Those are the best setups. And then any additional signature of strength if we're bullish, or weakness if we're bearish, in SMT, a high probability PD array in the higher time frames, is additional confluence. Okay, and you just need your piece, and we just need to be patient during the in-between. So hope you guys enjoyed this video, and I will talk with everybody soon.